reducing monthly obligations really can unlock your funds for inventory, hiring, marketing, and expansion, right? Not to mention just taking off that tremendous amount of pressure and stress. So today I want to unpack how to take control of your finances so that you really can set yourself up for that long-term profitability that you have. And, it is great when you pay cash for something. It is great when you pay things off early, right? Like I am a Dave Ramsey fan. I love Dave Ramsey, right? And those principles served me well in my younger years. But as I've gotten older, I've understood how our money, our cash flow work for us and not against us, right? So I talk to med spa owners every single day. And one of the questions that I ask them is, what is your break even point? And that often will tell me what their debt looks like, right? And whether it's for their build out, for the devices that they purchased, right? For hiring that injector, buying, $20,000 worth of injectables or $10,000 worth of skincare. It adds up so quickly, right? And I'll tell you, if that answer varies greatly. Sometimes I talk to people and they're like, oh yeah, $10,000 a month is my break-even point. Other people I talk to is $150,000 a month is my break-even point. And that really is the beginning conversations of cash flow management, right? Based on your break-even point and your average revenue coming in every single month. That then drives us to the conversation of talking about debt consolidation. Okay, so let's first understand really why debt consolidation can matter, right? That it matters because if your med spa has multiple loans, whether that's from, again, equipment financing, business credit cards, your build out for expansion, right? You could potentially be juggling really high interest rates with scattered due dates of payments. And that type of complexity can also, often lead to just cash flow challenges at the end of the day. I can't tell you how many times I talk to people that's like, by the time I built out and bought the device and ordered my consumables, there's no cash left to hire. There's no cash left to market, right? And so now you've invested all of this money and now you're just like surviving, right? Or you're having to, steal from Peter to pay Paul, right? You're going to have to dip into your personal savings account or your retirement account or take another job to pay for this one, right? It just causes so much stress and pressure. And I'll tell you guys, right, what's possible, right? It's not that uncommon where you have $20,000 or $40,000 a month in multiple loan payments. And we helped a client just last month, or actually it was just this month, help a client go from all of their multiple loan payments was like over 20,000. I think it was around $20,000 a month. And after the debt consolidation, their new monthly payment was $6,000 a month because they were able to consolidate it all together, take down a lower interest rate at the end of the day and pay for it longer over time. Now, at the end of the day, guys, debt is debt. You're going to have to pay it back, right? But why not give yourself some breathing room? so that it's not so, stressful, so that you have money to actually put those devices to work, right? Hire that team member to fire that laser, invest in that marketing to get new patients in the door to be able to use that device, right? Or see this big, beautiful space that you built out. So wouldn't it be nice if you took your loan payment or multiple loan payments from $20,000 a month to $6,000 a month? Just think about what that would do for your business, right? And again, I'm not saying this debt disappears, right? You're going to have to pay it back. However, this gives you that breathing room to be able to reinvest in your business so that you're not having to steal from Peter to pay Paul, right? So that you can actually invest in marketing to actually get people in to use that new device that you just bought, right? Do you see how debt consolidation can help with simplicity, predictability, right? And potentially lowering that monthly payment at the end of the day. So, all right, how do we do this? Yes, you're like, yeah, cool, sign me up. I want this. I want to know about debt consolidation. So the very first thing that you need to do is simply get your numbers and your paperwork together, right? You have to assess your current financial situation. So you have to really get a full complete picture of your financial landscape. So you need to be able to have a list of all of your debt, right? What the amount is, what the interest rates are, what that payment schedule looks like. And be able to evaluate really how much cash flow those loan payments are consuming of you every single month, to start getting a game plan of what would be possible and how it would really benefit your business if you were able to reduce it. Or maybe it's just fine, right? Maybe your interest rates are low and you're able to meet those payments, then you're good, right? But you need to have all of this data to be able to make an informed decision on what's best for you, and identify which loans have the highest interest rates, or potentially like the least favorable terms at the end of the day. And you need to know these things, guys. I can't tell you how many practice owners that I talk to and they just don't know. They've literally just signed willy-nilly on the agreement because they had to have that device because they wanted that specific location, and they don't even know what their terms are, right? So this is where you have to put your CEO hat on, right? Not an employee, right? But you have to know these things so that you can have a game plan, right? So that you can make it easier on yourself, right? And this is going to help so that if your current cash flow, isn't able to comfortably cover your debt, right? Then consolidation could be a massive lifeline for you. So in order to, step number 2, explore those options, right? There's a number of different things that you can look at. So the very first one is, a small business loan, right? So this is where, many banks or online lenders can offer, tailored small business loans, right? And often they have lower interest rates than credit cards for sure. So, if you're not able to pay off your credit card every single month, then a small business loan could be a potential thing that you could look at. Another thing is a business line of credit. Now, this is a flexible option, right, that allows you to, borrow really as needed while you're working on consolidating potentially your existing debt. However, if you are someone, that when you look at maybe your build out and your devices and your equity, your line of credit, right? And you have more than, let's say, $200,000 of debt total, which is super easy to acquire in the med spa industry, then I strongly encourage you to look at an SBA loan. Now, then SBA loan is going to give you the most competitive terms out there. It's going to give you the best terms, the lowest interest rate. So why doesn't everyone do it? Well, the reason why not everyone does it is because the process, if you're not working with the right person, can be very overwhelming. So much in the sense of you could start it and just be like, F it, I'm done with it, right? You can even be really savvy yourself, but working with the wrong financial advisor to help push through that loan. And it literally take months, years, like it never happened. I can't tell you how many med spas I talk to. They're like, oh yeah, I want you to build my website, or I want to work with your consulting team or your marketing team, right? But I have to wait until my SBA goes through. And then I say, oh, tell me, how long have you been working with on that? Are you doing that yourself? Are you working with an accredited advisor kind of thing? And I know when I see the writing on the wall of like, they're never going to get approved by the way that they're doing it, right? Because it's complicated, right? And some people can absolutely do it themselves, and it's amazing. But so few people can. And so this is where we help so many of our clients with getting approved with that SBA, or helping them with debt consolidation. Because we work with a trusted advisor that is so amazing. Like I say that if JJ can't get you approved for an SBA loan, then no one can, right? And he can do it the fastest. So I want to share with you, whether you ask us for help and wanting to talk with our trusted advisor, or you just want to start the process yourself. Here is some of the things that you need to be thinking about as you are evaluating debt consolidation and potentially working with a trusted advisor. Okay, so number one, you want to think long-term, big picture, right? You don't want to just put out immediate fires. Like that's how you got yourself into this mess of like, taking out, use this credit card, using this line of credit, getting this device payment, right? You got to think big picture, right? And what is that long-term impact potentially of consolidating your finances? Right. And so that you're not, whether you're in the beginning stages, think big picture, or if you've already, taken out all these little things, what kind of impact would that have if you were able to have it all wrapped into one consolidated payment, right? And be able to increase that interest rate and have more favorable terms and just one payment a month, right? Just think of how that would impact your business, and to really ensure that you don't have like crazy hidden fees or unfavorable terms that unfortunately we see so often people get themselves into, right? And then once you're able to have that debt consolidation, what's possible then, what you should do with that, right? So if you're someone that went from a 20,000, a month, multiple payments down to 6, right? Or you were at 40 and now you're down to 10, right? What do you do with that cash flow so that you can continue to grow and scale your business? And what we always recommend doing is, hire, right? So you can continue to scale. Is that another injector? Is that a front desk? Is that a practice manager? What is it that isn't only going to save you time, but make you more money? Right? Do you need to invest in marketing? Do you need a new piece of equipment to expand your service offerings? Do you need to invest in training or consulting to be able to enhance your team skills? The point is that you want to reinvest that cash flow opportunity that you just created with your debt consolidation, right? Of course, I'm glad that it increases your stress, right? And we want that to be more profitable, but it's still debt, guys. You're still eventually going to have to pay that off. So why not continue to invest in yourself, in your business, so that you can do it faster, so that you can increase your profitability that much faster? Okay, questions about debt consolidation. Okay, I see a few coming in here online. Okay, so common question is, what info will I need to provide to see what I qualify for? Okay, great question, because again, this is probably the biggest reason why there's a non-starter, or that you don't go down this route, or you just add it to your credit card, right? And have that crazy credit card interest rate every single month. That just kills me when I see that. But okay, so these are the documents that you need to put together. So you're going to have, the last couple years of tax returns, generally like 3 years of tax returns. You're going to need a profit and loss statement. Again, last couple years. You are going to need itemized debt and lease schedules. Okay, and what those terms are. You're going to need all of that itemized out. And you need to not be in any open lawsuits, right? Like you can't be in a lawsuit with someone. That's going to prevent you from qualifying. So that's you're going to have to do driver's license and an application and all those things. But the big things that generally prevent people from getting their stuff in to see if they can be helped or not is those tax returns, that profit and loss statement, and having your debt and lease schedules, having all of that together. But again, this is where, a member of the SBA or a financial advisor, a credible person, right, is going to help you to gather all of that information. Okay. Another question is, what's the process look like? How long does it take? So that varies, right? Like it's kind of like the question of like, well, how long does it take to close on a house or close on your mortgage, right? And there's people can turn it around very quickly, and sometimes it drags on. And most of the time, right, it is dependent on two things. One, how much you have your shit together, right? If you have your financials together, if you are able to provide them with all of the documentation and financial statements that they are requesting, how long that takes you to get all that together, right? That's a big thing. And then who you're actually working with. And this is where, again, I've seen a game changer for our clients when they work with our preferred trusted financial advisor, helping, I think they were like the #1 SBA lender the last couple years in the US, specifically works with medical aesthetic practices. Like they that is their jam kind of thing. But anyway, on average, we see it take about 45 business days from like that first conversation generally to like closing and become funded. Now, you don't hold me to that, guys, because again, it's really dependent on, how quickly you get your stuff to them. It's dependent on like your financial situation, if they have questions about the documents that you submit. But on average, that's potentially what we see that it takes. Any other questions? Any other questions? Cool. All right, guys. Well, to sum it up, debt consolidation, it really isn't just about relieving pressure and stress, which again, I can't tell you how many tears I've seen over Zoom because of the number of debt payments or loan payments, multiple across with high interest rates that is going out the door every single month. That's really impacting their cash flow. But even if like you are cool and good and fine and can make all of those multiple payments, debt consolidation really can be a strategic move that's going to help propel your business to grow and scale faster, right? When you're able to reduce your monthly expenses, really improve your MedSpa's cash flow, it's not just about getting out of debt, right? But it's about really creating that financial breathing room so that you can actually focus on growth and stability, right? Growth in your team, in your service mix, in your processes, in your marketing, right? And that's what's going to be able to propel and grow you faster, right? To get you that consistent, duplicatable result. When people are so strapped financially, it causes so much pressure and stress that you aren't making decisions the same way if you didn't have that same amount of pressure and stress. Okay. So if you are someone that is carrying multiple leases and debt payments please reach out to us. Let us help you get in touch with our preferred trusted financial advisor and just have a conversation. There's no cost to it. There's no obligation to it. I'm just so passionate about helping med spa owners with their debt consolidation because I've just heard so many stories from business owners that, literally can't sleep at night because they're under so much financial stress and pressure. And, they have to make it work, right? They're stealing from Peter to pay Paul. And it doesn't have to be that way, right? You can remove that pressure and stress so that you really are in the right mindset to continue to grow and scale your business, to invest in your team. I had a person the other day tell me that, they showed up to their team meeting because their numbers were down, and they just totally came down on their team. And they're like, afterwards they felt awful because they're like, yes, everything I said was true, but how dumb am I to think that my problems are their problems, right? And I could have handled it so much differently. But at the end of the day, you have to, I felt for her because I understand what she's going through. But if she didn't have that, pressure of having to hit that huge monthly break even or multiple debt payments, she would have approached that so much differently, right? At the end of the day. So I want that for you too. All right, guys, thank you for joining me here. Remember, if every Wednesday, same time, same place, catch us on Facebook, YouTube, LinkedIn, and Instagram. And if you like this training, please share it with another med spa or someone on your team that needs to hear this, right? To help them to be able to understand what's possible with debt consolidation, what's possible when you properly manage your cash flow so that you're able to spend the time and energy on what's ultimately going to get you to your big goals and your big vision that you have for your business. Thanks so much for joining me, and we'll see you guys next week.